In this video, we will talk about the pros and cons of cryptocurrency. Cryptocurrencies have the potential to reshape the financial world as we know it and to question the very existence of traditional financial infrastructure. But what are the pros and cons of cryptocurrencies? How do you decide which one to invest in, or whether to invest at all? If you're a little confused by cryptocurrencies, don't worry. We're here to break down the advantages and disadvantages of cryptocurrency, so you can learn everything you need to know. And if you're still stuck, check out our guide to cryptocurrencies for beginners. 5 advantages of cryptocurrency. While cryptocurrencies are a relatively recent invention, Bitcoin, for example, started up in 2009. They're definitely here to stay with all their benefits, from prospects of hefty returns to 24/7 trading on ultra-secure, transparent infrastructure. The world of crypto has plenty to offer if you know how to tap into it. 1. High risk and the potential for high rewards. There are more than 10,000 cryptocurrencies on the market today, and each one has its own particular quirks. But all cryptocurrencies have a few things in common, like their tendency to experience sudden spikes and drops in value. Prices are driven primarily by the supply of coins from miners and the demand for them by purchasers. And these supply-demand dynamics can result in hefty returns. 2. The blockchain technology underlying cryptocurrency is inherently secure. Some of the major benefits of cryptocurrencies aren't linked to the currencies themselves, but to the infrastructure that supports them. That's the blockchain, the decentralized data storage ledger that tracks every transaction undertaken on it. Once you make an entry in the blockchain, it can never be erased. 3. Bye-bye traditional banks. Hello to a fairer, more transparent financial system. By and large, our financial system revolves around third-party intermediaries who process transactions. This means that if you make a transaction, you're placing your trust in one or more of these intermediaries, and the recession of the early 2000s made a lot of people wonder if that was a good idea. Blockchain and cryptocurrencies offer an alternative. They can be viewed by anyone, anywhere, so you can take part in the financial markets and make transactions with no intermediaries whatsoever. 4. Crypto trades around the clock. Another advantage that cryptocurrencies have over banks is that the crypto markets are always open. With coins being mined and transactions being recorded around the clock, you don't have to wait for the NYSE, NASDAQ, or any other exchange to start trading for the day if you want to buy, sell, or trade crypto. This has made such an impact that regular stock exchanges are looking into the option of trading stocks outside of regular banking hours as well, although that might still be some way off. So for investors who are on the go 24/7, crypto might be the best way to generate returns outside of normal working hours. 5. Cryptocurrencies could help investors beat inflation. Cryptocurrencies aren't tied to a single currency or economy, so their price reflects global demand rather than, say, national inflation. But what about the inflation of cryptocurrencies themselves? As an investor, you can rest easy for the most part. The number of coins is capped, so the amount available can't spiral out of control, thus, no inflation. 5 disadvantages of cryptocurrency. So that's a lot of glitters, but is the outlook for cryptocurrencies really so golden? Let's take a look at some of the drawbacks. Some are easily resolved, others less so, but it always pays to keep them in mind. 1. Understanding cryptocurrency takes time and effort. Cryptocurrencies can take a while to get your head around. If you're not a digital native, the concept of cryptocurrency, let alone the blockchain, can feel anything but second nature. And trying to invest in something you don't really understand is itself a risk. There are plenty of online resources available to help you, including N26 blog series on crypto. But you'll still need to dedicate some time to truly understand the pros and cons of investing in cryptocurrency. 2. Cryptocurrencies can be an extremely volatile investment. While the price of a cryptocurrency can spike to dizzying highs, with associated benefits for investors, it can also crash to terrifying lows just as quickly. So if you're looking to make stable returns, this might not be the best bet. The cryptocurrency market fundamentally thrives on speculation, and its relatively small size makes it more vulnerable to price fluctuations. That in turn can wreak havoc with the value of coins, one of the major disadvantages of cryptocurrency. 3. Cryptocurrencies haven't proven themselves as a long-term investment yet. While cryptocurrencies have become widely known and are still gaining in popularity, it's worth remembering that they have only been around for just over a decade. The concept only really emerged with the publication of a white paper on Bitcoin in 2008. Stock markets, in contrast, can look back on centuries of history. The London Stock Exchange, for example, was founded in 1801. Gold has been a proven custodian of value for millennia. 4. Crypto has serious scalability issues. You could be forgiven for thinking that digital currencies operate at lightning speed, and they do up to a point. But at a certain level, they run into major issues which make it difficult to roll them out on a large scale. Cryptocurrency providers themselves admit this is an issue, with the people behind Ethereum saying that the blockchain has reached certain capacity limitations that slow the rate at which transactions can be processed. This can be a frustrating experience for transaction participants, to say nothing of the potential financial losses it can cause. 5. Crypto newbies are vulnerable to security risks. Cryptocurrencies might not have the risks that come with using central intermediaries, but that doesn't mean they're completely free from security issues. As a crypto owner, you could lose the private key that lets you access your coins, and with it, all your holdings. And then there's hacking, phishing, and all the other attempts to gain control by malicious means. This is something that seasoned investors keep an eye out for, but newer investors are more likely to be vulnerable to these kinds of traps. Make sure to watch the full video. Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.